support and resistance. I'm sure you've heard of those terms, but did you know that those two terms are the worst terms you can use in the stock market? Do you disagree? Let's see if I can convince you otherwise. What's up, everyone? This is Eric with Theme Options Trading, and we are in our 3-minute beginner series. And today, we're going to talk about why support and resistance are the worst terms you can use in the stock market. First, what is a support? Support is a term that is used to describe a level a stock has a hard time trading below, meaning the stock is staying above this level. Support hints that a price point or a level is bullish because the stock won't go below it, at least for now. Resistance is the exact opposite. Resistance means that the stock has a hard time trading above a certain price point or above a certain level. By definition, resistance contains a bearish connotation because for now, the stock is staying below this quote unquote resistance. So why are support and resistance horrible ways to describe a level in the stock market? Because they contain a bias. If you say support, you automatically are saying that that is a bullish price level. If you say resistance, this insinuates that this price level is bearish. But what happens if the stock begins to trade above this resistance? Well, you might say, well, that resistance has become support, and now it's a bullish level. But once again, this comment is containing a bias. This comment assumes that since resistance broke, it is now a support and a bullish price level. But that is simply not true. How do you need to describe these terms? Simple. You use the term key levels to describe both a support and a resistance. The term key level does not contain a bias. The term key level shows that you're going to trade based off of the response of said support or said resistance. When the stock approaches this price level, you do not think bullish or bearish. You think, okay, I'm going to trade based off of the response of the stock relative to this key level. Well, what happens if the stock approaches this key level and rejects it? Bearish. What happens if the stock approaches this key level and breaks above it? Because that is how price action behaved. This simple adjustment in my trading strategy paid largely. I no longer looked at a chart and said, oh, this is resistance, so if the stock goes to this price point, it should go down. I simply saw a chart and said, this is a key level. I'm going to trade based off of price action. And this subtle adjustment paid major dividends in my trading, and I suggest you make the same. And that's it. Thank you so much for watching. Please subscribe to my channel if you haven't already, and like this video if you found that it added value. Until next time.